Well, the African Development Bank has decided to make structural transformation the centerpiece at the annual meetings that are currently underway. We're speaking to Godfrey Mutizwa earlier, but earlier he caught up with Charles Okeahala, the CEO at AGH Capital, for more on that.
The private sector is going to go into areas where it can make a return. It's not going to go in and supply what I call basic infrastructure. So what would be nice would be for the debate to be split into two, such that we address non-basic infrastructure, which I mean telecoms, non-electricity grids.
Right.
And then the other thing is let's look at water and then look at electricity grids and look at railways, non-freight railways. Because freight railways, as we know, are easy to fund. Telecoms is pretty easy to fund.
Right.
Believe it or not, electricity, as we can see in IPPs, is very easy to fund.
Right.
But the key issue here is who will fund in a low-income area water in a distant place that's far from a main urban conurbation which has economies of scale?
Yeah.
Who will fund water for rural people? Now, that's the kind of debate that splits us away from what the market can do and what an institution like the ADB has to do.
Sure. So what you're saying is that there will be money that's geared for private infrastructure, but it will be directed into those areas that are probably a little more visible than, if you like, the infrastructure that serves poorer communities.
Exactly. Exactly.
What is the issue there? Is it a question of returns? Is it a question of risk? What is the issue there?
At this meeting, there are going to be probably 20 or 30 people who are representing funds with a lot of money looking for opportunities. But they're not looking for opportunities where they can't make a financial return.
Sure.
So what we are trying to do is ask the bigger question: who is it that's going to work out an innovative way to fund the obvious areas, and I call that finance the obvious areas, such as telecoms, and then call it something different: fund the areas which are not obvious, the socially demanding areas. They're obvious in that people are poor. They're obvious in that there is a need, but they are not brought to the fore because that's not what the private sector wants to do. Now, the other issue is who will capacitate the process of investment and what has to be done. If I answer the first question I posed myself, Godfrey, now, you have to, apart from building infrastructure, you have to maintain it. And that's why I see private-public partnerships could slant their arguments away from, will the private sector put in money in social infrastructure and basic infrastructure, to will the private sector transfer its skills, some of its skills, to support government in enhancing the infrastructure that exists already. That's one issue. And then if you look at it, who will be, what role is an appropriate role for the private sector to play? And what role is an appropriate role for government? Now, government has to do all the things we've said and we've talked about for a long time. Respect property rights, governance, reduce corruption, the usual litany of issues, right? And in some countries, there's meaningful progress. I mean, Godfrey, despite it, believe it or not, any visitor to Lagos will tell you, and to Nigeria will tell you, that the government there is embarked on infrastructure. So one has to say quite obviously that the current president in Nigeria is making some attempts, some serious attempts to sort out the infrastructure, and should be commended for that. And why am I saying that? Because unless you get somebody to own the reforms never take place. So what I mean by this, Godfrey, in every country there is a custodian of political rights and costs. And that normally is the head of state. So you can have economic czars, financial czars, but in the end, they carry political costs, any reforms that are put in place. Someone has to be able to soak them up and explain to people that I agree with what my ministers are actually doing. And therefore, that takes me to government. What is government doing? And what can government do to encourage the private sector to play its own role?
Okay, so the government needs to do more than they are doing now. Let's talk about another aspect of infrastructure. You work, of course, in capital markets, and we know that Africa's capital markets are weak. We know they are undeveloped. We know they don't have depth. Let's talk about the markets that you are active in. How do we get governments to support those so that the growth is more? I mean, I look around the volumes that are traded on exchanges outside of Cairo, outside of Johannesburg and Nairobi, and you see clearly there needs to be more.
Yes, and you know, the issue is, stock exchanges are there to exchange stocks. And where there are no exchanges, there's low liquidity. Without liquidity, there's no price discovery, there's no efficiency of the market. So you can't signal to investors how well or badly a company is doing, how the quality of the stock, the quality of the management, the quality of its plans, its budgets, processes, etc. Compliance with rules and regulations. But you see, some countries have these exchanges but don't have scale.
Right.
So one of the ideas which one has muted and put forward in a number of occasions, at a number of occasions, is ways in which these exchanges can merge. And I know that the Africa Stock Exchanges Association and other bodies talk about this. But there are a number of models. The first model, Godfrey, is to have a kind of central clearing party, where you're not actually
for different exchanges.
For different exchanges. So what you do is have one clearing party, so that you could have a situation where you might trade on a different platform. You put it all to a particular place to clear and to settle, assuming you haven't got that backup to make the settlement and clearance facility fast or as efficient as you want it to be. But the key issue is that it's a scale issue, Godfrey. So, and it cheapens the whole activity of trading. So what one has to find a way is to get scale so that you can market the presence of the exchange, give confidence to investors that they will be cleared and settled quickly, and that there's a transparent process in getting to the price of what they actually bought, such that people believe now, even if I am located in Botswana, or I'm located in Lusaka, or I'm located in Luanda, it doesn't matter where I am, but I can get the same signals about price. I can get the whole same settlement.
So regional stock exchanges are the answer then, in part that's what you're saying?
Well, I think so. I think that on our vision...
How do we get the politicians to work on it?
You know, it's that issue. On our vision to an integrated Africa, someone has to be the wildebeest that crosses the river first. Someone has to say, I really believe that it's possible for us in Southern Africa to work together on a unified platform. This is why, Godfrey, I've often said that we have put sometimes the cart in front of the horse. We can't have monetary integration unless we have some meaningful real economy integration and financial sector integration. So somebody has to be brave enough and say, look, why don't we get a way to get Lusaka's liquidity ratios to go up, Luanda's liquidity ratios to go up, Botswana's. And I'll give you an example of how it can work. I agree that Namibia and South Africa, with this example, are intertwined because they are in the CMA, the Common Monetary Area, of Southern Africa. But even if they weren't, you can see the advantages. The liquidity level in Namibia is much higher than it would be if it were not the case that it was linked and integrated with Johannesburg.
Companies that are cross-listed.
They are cross-listed. And this is a possibility. You can do this for Tanzania, Dar es Salaam, with Nairobi. You can do it, for example, with Luanda. Luanda, well, it's on the wrong side. Luanda, perhaps, if you wanted to, but Luanda logically might want to do it with, for example, with South Africa within the SADC context, And then in West Africa, since we have that block there, we could look at the BRVM, but we could look at an integration between Nigeria and Ghana, and Nigeria and Cote d'Ivoire, and that would enable this critical mass to take place. And then you'd have three. So then you would then find, okay, we've gone from having many to just three. Then the debate will then take place after that on how to integrate those three together.